slipping into a daydream. Are you also hearing Jennifer Garner ask,
"What's in your wallet?"
Well, what's in your wallet is very important. And as for all that credit card rewards talk, she might be onto something.
Most people should be able to save at least a few $100s every year just by using the right credit cards.
If you travel as much as Peyton Manning,
extra night in San Diego,
or are a diehard Swiftie trying to save on those expensive concert tickets, as these commercials will tell you, there's a card for everyone. And those cards will save you money. Well, that is, if you have the funds to make the rewards worthwhile.
They could be really useful, or they could be dangerous. I think the biggest tip is to know yourself.
Love them or hate them, those plastic or metal cards that can instantly purchase anything from a coffee to a car are no stranger to consumers. More than 80% of Americans own at least one credit card. Every time you pay for something with a credit card, you're borrowing money from the card issuer to cover your purchase. While it might feel like it, it's certainly not free. You then have to pay that money back either in full at the end of the month or over time, with interest.
The average credit card charges about 20% interest these days, so it is a very profitable business.
So, first things first. If you're not in a place where you can pay that money back by the time it's due, experts don't recommend you have a credit card at all.
Paying 20% interest on a balance that you've accumulated, and then you pay interest on top of that. I mean, that's a really big hole that you're continuing to dig, and it's going to be really hard to get out of if you don't pay your credit card balance.
Credit cards require approval. Once you're approved, the bank authorizes a credit limit or the maximum amount of money you can borrow. That depends on factors such as your income, your other debts, and how much available credit you have on other cards. But here's the caveat. Whether or not you're approved depends on your credit score. Meanwhile, your credit score is determined by your credit report, the information related to your credit activity. Activity you might not have if you don't have a credit card. It's a catch-22.
How do you build your credit history? Well, the simplest thing is really to get a credit card, use your credit card, and pay it on time.
Credit scores generally range from 300 to 850. The higher the credit score, the more responsible you're deemed. Credit scores not only affect whether or not you get approved for credit cards, but also your credit limit and your interest rate on loans, mortgages, and the terms lenders may assign you. Insurance providers, landlords, and employers might also want to do a check to determine your trustworthiness.
If your goals are to buy a house, get a car, get a loan, the first thing that you need to do in order to build your credit history is to get that credit card going.
Those Jennifer Garner commercials are for Capital One, but there are numerous companies in the US that offer a wide range of credit cards. There's the issuers, American Express, Discover, Bank of America, Citi, Wells Fargo, and then there are the networks. They facilitate transactions between the merchants and the card issuers. The four major card networks are Visa, MasterCard, American Express, and Discover. Two of the world's largest card networks, American Express and Discover, are also card issuers. There are standard credit cards, rewards cards, balance transfer, charge, student, business, secured, limited purpose, prepaid cards, and the list goes on. Different options that may or may not be right for you depending on your personal circumstances. Standard credit cards are the most traditional type. They have an annual percentage rate or APR, sign-up bonuses, annual fees, late payment fees, balance transfer fees, foreign transaction fees, and the most exciting, rewards.
When I go in, crank that roaster up, that's a really good feeling. The best part of owning a business is doing this together.
It's really an experience when you walk in here, like you're really shopping for something you can't find at any other store.
We've been in business for a long time, but we're just really grateful that we did get here, and we're looking forward to the future.
There's actually a whole industry dedicated to maximizing credit card points and miles. Some people love it, and they love going down that rabbit hole and treating it like a game.
Bankrate.com senior analyst Ted Rossman earned more than $1,700 in rewards in 2022. But getting the most out of your credit cards depends on your spending habits. Which perks would save you the most money? So, how do you choose?
If your family spends a lot on groceries, get a card that gives 5 or 6% cash back on groceries. Like, that's a really nice inflation buster right there. Maybe consider a second card that's just a solid flat rate, something like 2% cash back on everything. Most people should be able to get at least $200, $300, $400 a year just by using credit cards.
Rossman says the rewards that get the most attention are often travel-related. Flights, hotels, rental cars, access to airport lounges, free or discounted TSA pre-check, priority passes, global entry, or clear to get you through those long airport lines.
I think a really good strategy for a lot of people is one of those transferable points cards, something like Chase Sapphire Reserve or Amex Platinum. Being able to transfer to different airlines and hotels opens up a lot of options. The sort of next level tip is within that, if you find partners of partners, like United's part of the Star Alliance, and American is part of One World.
Then there's rewards for dining, groceries, gas, and also complimentary memberships and subscriptions. Big perks for many are extended warranty and purchase protection.
A couple years ago, I actually saved $300 on an Apple Watch repair. The credit card covered the replacement.
But according to Bankrate, Americans' favorite credit card reward is cash back.
I think especially now with high inflation, who couldn't use more cash, right?
Whereas redeeming for merchandise will likely not get you the most bang for your buck. Other rewards include sign-up bonuses, fraud protection, and having the ability to invest your money and take advantage of interest rates. Another thing to consider is how much work you're willing to do. Are you that person who's going to tape notes onto your cards to remind yourself which should be used for different types of purchases?
I know some people that have 30 or more credit cards, and they have really good credit, and they get really good perks, and they're constantly flying first class for free. Now, that's not for everybody, of course. The average American has about 4 credit cards. But even with 4 cards, sometimes there can be a game element to this.
Having multiple cards and playing that rewards game can get you some substantial sign-up bonuses, like the Capital One Venture Rewards credit card's 75,000 miles, or M.X.D.Z Unlimited's $900 in cash back.
If you are playing this rewards game, which a lot of people like to do because they like that upfront bonus, you're getting a new credit card and then you close it out, you're losing that credit history. So my recommendation is not to do that. Only use a credit card if you can use it responsibly.
American credit card balances reached $986 billion in the last 3 months of 2022.
The big fork in the road is whether or not you carry a balance. If you pay your credit cards in full every month, then yeah, I think you should use your credit card for everything because rewards are great, they can really add up over time.
Even though it's simple math, a 2022 survey found that among credit card holders who carry a balance, cashback was more than 4 times as popular as a low interest rate. Meanwhile, a large share of those who owe debt, 40%, don't even know the interest rate for the primary card on which they owe money.
One of the biggest things that we see about the spending of credit cards and those that are using it incorrectly are those that are either from lower income households, those that are uneducated in this, because no one is talking to them about money.
A recent Bankrate survey found that 30% of those without a high school degree didn't redeem their rewards, compared to 16% with a 4-year degree. And the lower an American's income, the more likely they were to let those rewards sit as well. More than 30% of those with annual household incomes below $50,000 left value on the table, compared to about 20% of those with incomes between $50,000 and nearly $80,000, and just more than 10% with incomes of $100,000 or more. Sage Mint Wealth managing partner Ann Tran says culture plays a big part in how people spend.
I grew up in an immigrant family. I wasn't taught about personal finance. You just make as much money as you can and get yourself out and build wealth for yourself.
Tran recommends having 2 credit cards and 3 if you're a business owner. 1 for primary expenses, a second as a backup, and a third to keep business expenses separate. She says there should also be thought going into your credit card limit and your spending ratio.
Let's say you have one credit card and you've got a $10,000 limit on there and you spent all the way up to $9,000, that actually will lower your credit score because your credit to debt ratio is not good because you've used up most of your credit. So the rule of thumb is, I would say, try to stick around 30% and using what your credit availability is. And so that's why having a second card will give you a little bit of leeway in giving you more credit to spend.
For those with credit card debt, while experts don't recommend you open multiple credit cards and try to maximize your rewards, that doesn't mean you shouldn't work on ways to build your credit so that you can get to that place.
If you have credit card debt, no shame, a lot of people do, about half of cardholders, but you need to put your interest rate first. So maybe seek out a 0% balance transfer card, or stick to the lowest rate card you can find, or just use cash or debit until you're debt free.
There are a lot of cashback rewards cards that do not have annual fees that will give you 1% back on all your purchases, and that is probably the most simple.
Now, let's say you get to a place where you've got some plastic in hand and you're feeling good about those rewards. The work doesn't end there. She says you should continue to reevaluate your debt and credit cards at least once a month.
Tracking your finances, whether it's on an Excel spreadsheet or using an app like Mint.com, something that will track what all of your assets, all of your debt and liabilities are so that you know where everything is.
And if you're racking up those points, use them. Almost a quarter of rewards credit card holders haven't redeemed any rewards in the past year. And that's an improvement from the 31% of those who didn't in the preceding 12 months.
It doesn't get more valuable over time. In fact, a lot of times these programs change their rules in ways that the industry calls devaluations. Like basically it costs more points or miles to get the free flight or the free hotel stay. So use them sooner rather than later. And then cash back too. That can lose value to inflation.
Most people are scared of money, and you shouldn't be. If you know the facts and you understand how money works, it can be really empowering.
First credit card to spend responsibly. But what about repaying responsibly? Recently, the term credit cycling has taken off on social media following a wave of people sharing stories about their bank accounts being closed. The topic is highlighting a growing lack of financial literacy among credit card users.
Our chief business correspondent with Queen City News, Taylor Young, joining us this morning. And Taylor, first of all, we did basically a poll. Almost no one has heard of what credit cycling is. Explain it. What is this, Taylor?
Yeah, so it's when someone essentially repeatedly maxes out their credit card, then pays it off all in one cycle. So it's like this revolving door of debt. And I think it's better explained with an example because I think that can get a little bit confusing. So say you open a new credit card and your limit is $5,000. You decide to make a big purchase, spend it all in one place on a new gaming system. Well, you have officially maxed out your credit limit for the month. But, and this is where it gets important, instead of waiting until your next cycle to spend more, you pay off that new gaming system immediately, which then brings your credit limit back up to $5,000, and you continue to make more purchases. So this essentially allows people to spend far beyond their credit limit, and in some cases, doubling it. Now, this is a practice that has become a trend among young credit card users, and while very tempting, it does come with a lot of risks.
I don't know why I'm still confused on this here a little bit. Like, what's the fascination with this, right? Because I'm sitting there going, I mean, if you pay it off within the 30-day cycle, what? How is that harmful? You're paying for it, and you're not incurring a finance charge.
Yeah, because you technically have a credit limit, right?
Right.
So what you're doing is burning through that.
Okay.
And then paying it off, and then boom, your credit limit is back up to your normal spot. So there's a lot of reasons of why this can be a little very tempting. The biggest one is you can really rack up rewards. That's your cash back, your travel points, your sign-on bonuses. And also it can be tempting because this allows you to, again, increase your credit limit so you're able to make a lot more purchases than what the bank essentially told you that you could in the very beginning.
Okay, so what are the risks associated with? Because I'm with Jason. If you're paying it off here before the monthly billing cycle is over, maybe we're just too old to figure it out. What are the risks here?
I mean, the biggest risk is a bank kind of noticing that you're doing this and then shutting down your account and then taking back all of your rewards, because banks spend billions of dollars on rewards every single year. It's what gets people to open up credit cards, right? They even kind of have competitions over, well, my bank offers better rewards. Well, this artificially kind of inflates the cost a bank would be spending on those rewards. But secondly, and I think this is the one that people should really think about, is that this can also raise alarm bells on the type of behavior that you're doing. So it can look like you're in financial distress. You are borrowing way more than the bank allots you to. And second, it also mimics fraud and money laundering. And that's not something that you want to have on your account either.
Okay, can I throw another example out there to see if I'm in the ballpark? I'm trying to wrap my head around this. All right, so let's say you get 2-3% cash back. You max out the $5,000 for the month. You pay it back in a week, right? So you got 2% cash back on the $5,000. You've paid it off.
Yeah.
I make another $5,000 purchase. I'm getting another 2 or 3% cash back when I was originally only supposed to get it on the $5,000, right?
Yes.
So now I'm getting it on $10,000
Exactly.
within a 30-day cycle.
Yes.
That's where the red flag comes up to
Yes.
these banks going, we only told you could do it on your max amount. You're doubling that amount in a 30-day cycle.
Mm-hmm.
That's the issue here. It's not that am I getting into debt? It's I'm sort of taking advantage of the system.
Yes.
That is
and
okay.
the concern
all right.
is not just on rewards. I mean,
Yeah.
that's a benefit of this for the people.
Sure.
But it's the behavior that
Okay.
this looks a lot like money laundering.
Wow, this is really interesting. And financial literacy continues to be an issue for not just younger generations, but everyone still.
I mean, considering that a lot of people are doing this and not even realizing. I mean, even just our conversation is kind of like, why is this wrong?
Why is it wrong? Yeah.
So a lot of people are accidentally doing this, which is why it went kind of viral on social media, because people were responding saying, wow, I didn't even know that this was kind of against bank policy. So read your contracts with your bank when you open up a credit card, or you could lose all of your rewards. But I'm kind of looking bigger picture here. There are several studies out there that say that financial literacy is actually declining since 2020. According to the National Financial Literacy Council, 40% of U.S. adults right now could not pass a basic financial literacy test. So I do think on a positive note, though, a big part of why people are kind of losing that financial literacy is because it's not really taught a lot in schools, right? We're not really taught, I wasn't in high school about financial literacy, but a lot more districts and states are starting to incorporate that in their curriculums. Just back in 2022, I covered this when it happened. The South Carolina Board of Education made it a requirement that all high school students had to take a credit card literacy program or class before graduation. So hopefully this is something that we all kind of get better at, because clearly I think a lot of people didn't know about this. And I think that's why it's going viral right now.